Hi, it's Shauna. How are you?
Seana, sorry. So good. Rob and Michael,
Hi,
welcome,
Kareem.
welcome, welcome.
How are you doing?
Thank you so much. No, we're doing great. We're running on time. We had to catch up quickly, so we're all out of breath, but I'm so happy that you're here. We're going to be talking to you today about the food and ag tech challenges and opportunities. This is something that's on everyone's minds. I don't think we're paying enough attention to it. So walk us through what that looks like, a brief introduction of who you are, what you do, where you find opportunity, and as investors, what should we be looking for? As you know, this is a panel of accredited investors who are looking at various aspects. We've touched on blockchain, we've talked about currency, we've talked about alternative assets, we've talked about robotics. We'll be, after this panel, we'll be talking about space. After that, we'll be talking about building unicorns, and then back to digital assets. So you're the only panel about food, and I'll tell you what's going to happen. We had NFTs a year ago. No one knew what the acronym meant, and then we've had 2 pounds on NFTs today. I think what you're touching on with Better Food Ventures and what you do is highly important, and people need to pay attention. So I leave the floor to you till 3 o'clock, and I'll bump in about 20 minutes and say, hey, I'm back. It's time for Q&A and to wind down, if that's okay.
Fantastic. That sounds great.
Thank
So
you.
yeah, I'm Rob Trice, and I started Better Food Ventures. It was kind of fun actually listening to that last panel because Michael and Sean and I all come from a longer technology history. I was, just to kick it old school, an investor in RockU and Kabam way back in the day in the gaming space. But after about 15 years in the mobile internet telecom space of VC investing, I really started to look at food tech and ag tech. And I'm so happy that Shauna and Michael have joined us at Better Food Ventures, where we're specifically focused on how we can bring digital technology innovation to the food and ag value chain. And so we've kicked off. We've done about 19 investments, everything from seed to stomach and everything in between. And I mentioned Shauna and Michael. Maybe what I could do right now is just have them very briefly introduce themselves. So Shauna, you want to go first? Ladies first.
Thanks, Rob. So I'm Shauna Day. I'm a venture partner with Better Food Ventures, and I'm sitting in the heart of California's Central Valley. So I like to call myself a recovering investment banker. Spent about 15 years advising in M&A and venture and private equity with a lot of mobile communications companies as well as enterprise software. And I gave it all up to come back to my hometown about 7 years ago and really dedicate my life to the intersection of ag, food, and kind of finance and strategy. And so fast forward today, and I spend most of my time focused on ag tech, so looking at in-field technologies and then post-harvest into the food supply chain, which we'll touch on a little bit today as well. And one of the things that I think we always like to kind of ground ourselves in is that our team really looks at IT for food and ag, so specialists in software, hardware, software-enabled hardware and applications. Certainly a lot is going on in the biosciences, genetics, synthetic biology, as well as consumer products, but our team is pretty focused on those kind of enabling technologies.
And Michael.
Thanks, Rob. So my entire career has been focused on new venture creation and innovation in both startups and in larger corporate environments. And for the last 6 years, I've been investing with our team across the entire value chain of our food system, from tech for open field production and indoor ag to consumer-facing food tech. Prior to Better Food Ventures, I've spent 2/3 of my career in tech working across a number of sectors and verticals as an operating executive, as a board member, and also working with institutional venture capital as well as corporate venture capital. First third of my career was in the restaurant and food sector. So our investment efforts here at Better Food Ventures, focusing on tech to make an impact in our food system, really encompasses my professional career and efforts to date.
Cool. All right, so what I wanted to do is maybe just kick it off. We've been at this a while now, folks. And yeah, to Kareem's point, this food tech and ag tech, when we first started, we didn't really even know, it wasn't a defined term in Silicon Valley. Food tech, agri-food tech. And now, we had 130 billion under assets under management in this space last year. There's a significant understanding of the challenges related to digitizing our food system. I just kind of wanted to get your thoughts kind of as you do that look back historically and where are we and what do you think of that growth that's occurred in this space?
Yeah, Rob, maybe I can jump in on that one. And just to kind of set the stage for the audience, as we look at aggregate investment into the ag tech and food tech ecosystem globally, last year was a banner year. I think a lot of people going into 2020 didn't quite know what to expect. And we saw venture investing, later stage investing, early stage investing rise from 22 billion in 2019 to just over 30 billion in investment last year, which was a banner year, you know, a standout year for the sector. And I think as you sort of unpack those numbers and look at where the dollars were flowing, it's interesting to see the level of maturing that's really starting to happen across the whole supply chain. You know, I can speak probably more to the farm tech and ag tech side of that equation. And, you know, there was even a kind of, for the first time since we've been tracking it, an uptick above more downstream technologies, consumer facing technologies in that part of the ecosystem last year. And what you kind of see though is that there's a real maturing, and those later stage deals, you know, bigger check sizes, bigger rounds are really starting to emerge. We're starting to see more consolidation, and granted, a lot of it's kind of defensive or, you know, bolting on or tucking in products and customers. But it's a good sign for investors, right? To start to see some turnover, some liquidity in the space. And I think that will continue. We saw a little bit of weakness on the seed and the real early stage deals last year, just in terms of deal flow. And I think a lot of that was due to, you know, just people wanting to double down on those existing portfolios, make sure that there was enough cash flow to kind of get them through uncertainty that we saw in front of us. We're also seeing more generalists kind of come into the space and looking for those later stage de-risk technologies. So all in all, really good headline news, and you know, just a lot of interest in the sector from sustainability, traceability, all those themes that we're seeing the consumers asking for, I think are driving a lot of investor interest here.
Michael, anything to add there?
Yeah, well, I would say that when we're looking at making investments and looking at entrepreneurs we want to back, we're looking at folks that want to make an impact today and be impactful in our food system now, as opposed to, you know, trying to find solutions that are only going to solve challenges, you know, feeding 10 billion people in 2050. And I think from a maturity standpoint, one of the things that we've seen over the years is, you know, early on we saw entrepreneurs and people developing new technologies and services who didn't go out and actually talk to the customers to really assess that need. And now we see them doing traditional product and service design and talking to that customer before they even start that effort.
Yeah, I think Michael hits on a great point there, Rob. And to borrow one of my favorite terms from you, it's really, many people on this call may or may not be aware, but ag is the least digitized sector of our economy, yet it represents, you know, 5 to 10% of the global GDP, 10 to $15 trillion globally. So we're talking about big markets here, but really under digitized. And this idea of crawl, walk, run is something I think people need to stay grounded in. You know, we're in the early stages of going from pen and paper or, you know, best practices in your mind to, okay, let's do some digital record keeping. Let's look backwards and see what we did last season. All right, now we're starting to get some trend lines, you know, in place. We can use our digital technologies to start to make some decisions about what should I do, what's going to happen, you know, this season. And really, before you can get to that kind of optimization and automation, we've got to put those basic building blocks in place. And you know, a lot of companies are focusing on solving those challenges today. And then we start to see, you know, the real potential for data analytics, for AI, for machine learning get unlocked. And I think the next 5 to 10 years are going to be really exciting in this space.
And just to build on Seana's point, you need to have an understanding of where this market is to understand what is, and to Michael's point, what's appropriate for the venture market now, as opposed to what you might think and looking at a challenge in the future. As an example, we just made an investment in a company that isn't particularly sexy, but what they're doing is digitizing the wet dairy milk logistics market. And we're basically replacing pen and paper. But if you think about from a farmer and a dairy co-op perspective, this is where they are at. And so this may not grab sexy headlines and TechCrunch or anything like that. This is what's needed to solve the problem for the customers in the market today. So yeah, I wanted to ask Seana and Michael to spend a little time kind of doing a little bit more of a deep dive on 3 topics. And to John's point, I'm going to be watching Q&A. We'll leave a couple minutes at the end for Q&A, but I asked them to speak about 3 topics. So one is climate smart, soil centric agriculture. 2 is indoor agriculture. And third is food supply chain tech. So Seana, you mapped out earlier this year about 150 different companies looking at climate smart, soil centric agriculture. Can you share a couple takeaways that you had from that work?
Yeah, for sure. And I think a lot of this conversation is really rooted in the discussion around carbon marketplaces now and carbon sequestration, where there's obviously a lot of excitement, and I'll kind of build my way into that. But what we basically found in looking at all these companies, looking at ground truthing with soil sensors, looking at aerial imagery, remote sensing, the marketplaces themselves, and some of the software that enables the measurement, reporting, and verification, the reality is it's still very much in its early days. You know, we've got unit economics that are still need to be worked through. The cost to actually measure your soil, measure carbon in the soil, measure your soil health is sort of outsized versus where the farmer returns are right now in those marketplaces. Those ground truthing tools are still pretty nascent. We really need kind of corporates to look at the tools themselves and how to help those companies scale up. You know, I think remote sensing, again, is a really additive piece of the layer of the cake, but in and of itself, it's not going to solve all of our problems. And certainly CPGs have a lot of interest in sort of advocating more regenerative, more sustainable practices, yet, you know, the kind of benefits aren't quite accruing to the farmers themselves yet. So I think there's a strong case to be made for, you know, what can we do today versus what's going to take us 3, 5, 10 years to figure out. And certainly as we kind of reposition the way we think about incremental improvements to soil health, not just the end game of carbon sequestration, but, you know, are you improving aggregate stability? Are you improving water holding capacity? Are you improving biodiversity? All of these things we can measure, but it's just, again, getting back to that crawl, walk, run theme. So now I say all of that with kind of the backdrop to, look, if you've ever looked at the Gartner hype cycle, or you sort of know that it goes like this, and there's a peak of inflated expectation, which is typically followed by a trough of disillusionment. And I would venture to say that carbon sequestration, carbon marketplaces are right around that peak of inflated expectations right now, but we still have a lot of work to do to get the rails, to get the pipes in place, to do the measurement, reporting, and verification, so that investors, so that buyers of credits really have the confidence in what they're buying, and the authenticity and the stability of those products and those credits.
That's great. And for just to level set with everyone, agriculture can become the first and largest major sector of the U.S. economy to be carbon negative. So if we are able to improve the way that we do agriculture. So that's the huge opportunity, a lot of impact dollars flowing into this space, but we're still trying to work it out. And, you know, that message of we got to crawl before we walk, before we run, you're going to hear that from us time and time again. So Michael, do you want to talk a little bit about indoor ag tech? You just finished up an analysis looking at 1,300 different companies using technology for indoor ag production. Can you talk about how you define that space and maybe some of the takeaways that you had there?
Sure. So when we do, and we've done this analysis on a regular basis and we focus on indoor ag tech or scale food production. And so when we look at those 1,300 CEA companies, we segment that entire ecosystem kind of on a traditional tech basis. So we look at component technology, we look at broad, complete systems, and then we actually looked at and bucketed the innovative growers as a segment because many of them are developing their own technology. We then, of course, break everything out into smaller categories from automation, environmental controls, or pest monitoring or farm management. And then I think really importantly, we broadly bifurcate the market into greenhouse production and what people know as sunless or vertical production. And we make at this point to really highlight over the years the greenhouse approach, because over the last few years, sunless vertical has captured a great deal of attention, which is great. But a lot of people may not appreciate that Dutch have been growing indoors with tech-enabled approach for over the last 50 years. We believe that the both of them have a place in the market, and the common benefits they have, such as growing produce without pesticides, using 90% less water than traditional production, flexibility of where they can locate their farms, and greater space or land utilization is true for both of them. Both approaches have their challenges with their energy footprint, but that's more so with the sunless vertical growers. Lighting and environmental management make up a significant portion of their operating costs. So they're making progress, but there's still work that's required to improve the unit economics and reduce their energy consumption. On the other hand, sunless or vertical operations typically have automation already designed into their systems, and of course, automation is very important across this space in general, both in open field and indoor growing. Automation is less built in and deployed with the greenhouse market, and there's a tremendous opportunity there for automation, particularly in the more complicated crops for harvesting and crop care for tomatoes, peppers, cucumbers. Like open field production, we're seeing labor challenges in the indoor sector. And those labor shortages, interestingly, include growing expertise. So at the end of the day, even though you're utilizing technology to grow indoors, you're still growing living things, living plants, and you need master growers and agronomists to be successful. And there just aren't enough master growers to meet the growth trajectory of this sector. So there's a real opportunity to leverage hardware and software platforms and sensors and data analysis to extend that reach and capability of agronomists moving forward. One final thought.
Yep, go ahead, Mike. Sorry.
I was just going one final thing on this I think is really interesting about the indoor ag sector, if you step back and look at it, is that those growers are essentially vertically integrated as producers. So unlike a commodity food producer and some of the specialty growers, indoor farmers are growers, and they also package, and then they sell a branded consumer product. And we saw during the pandemic, a number of them actually added direct sales to consumer capabilities. So that gives them the ability to be more agile and responsive in meeting consumer needs. They can better market their value prop of sustainability and being pesticide free. They can more easily develop and test new products, and they command a premium pricing. So if you compare this to growers that sell to someone else in the supply chain where they get commodity pricing and they have no idea where their produce is going or who is buying it, you can see there's a lot of advantages for being vertically integrated and selling a consumer product. So,
excellent. We've also been having an internal discussion about that lack of water out, and Seana's out in the Central Valley, and they're talking about turning off the faucet for 7,000 farmers out in the Central Valley. What's that going to mean for the acceleration of things like greenhouse-based tomato growing out in the Central Valley as opposed to field-based? We don't know yet, but certainly the economics are there. All the claims that the indoor ag people make about, saving 90% water will become much more substantial if indeed this water situation is as bad as people suspect. Seana, let's turn it over to you for that third bucket and just talk a little bit about food supply chain tech for all of us that experience some sort of shortage or crisis finding toilet paper or some food product during COVID. What's the answer?
Yeah, the silver lining of COVID is that it gave me a chance to not be on the road as much, and my other partner, Britta Rosenheim, and I got to really dig deep for an extended period of time looking at the food supply chain tech. And the way that we kind of define that is from the farm gate to the loading dock of a grocery store, of a Qdoba, a big food service provider. And as Michael sort of laid out for you, we think about our world in market landscapes as well, and we kind of break it down into four key kind of constituent parts. The first mile, which is really from the farm gate to your food processor, to your produce packer shipper, that first handoff essentially. Then food manufacturing, food processing, followed by distribution and logistics, and finally demand side. So what are the grocery stores using to better forecast demand? And there's a lot of technology out there. In fact, that's probably where we've seen really the sector, the subsector leading in terms of digitization. The first mile, conversely, is your least digitized part of the market, and that's closest to the farm gate, as I mentioned. So I think as we sort of look at those four constituent parts, we uncovered about 650 companies, and historically it's been dominated by, you know, your horizontal software players, your Microsofts, your SAPs, those that are providing those ERP systems into food processors, distribution facilities. And what I think COVID really showed us is, you know, we recognize that there were these dislocations in the supply chain, and why was that happening? You know, how could communication between the stakeholders, between the supply chain partners have been improved? How could forecasting and visibility, you know, you can't forecast a channel shutting down overnight like food service, but what can you do to be more agile and responsive to these dislocations? And what you really start to figure out is most of them have not been invested in for decades and decades. And we have this sort of very rigid food supply chain that is, you know, screaming for investment in more modern technology. So you start to see themes like Industry 4.0, automation, internet, or industrial Internet of Things emerging across the manufacturing sector and a lot of other sectors. You know, that's next for food and ag, and really becoming a lot more agile and a lot more automated. We look at other areas like connected logistics. You know, how well are we loading up those trailers that are going across the country with blueberries? And should they be shipped from Oregon to North Carolina, or should they be shipped from Maine to North Carolina? You know, all of these things that have historically, we just have had a lot of blind spots in our food supply chain. I think the opportunity for technology here is substantial. And in fact, if you talk to some of the operators, we pulled a couple of them and said, you know, how has COVID changed your appetite for investment in technology? And we had a couple say it's accelerated it by probably 5 years. Now, maybe, you know, dial that back to 2 or 3 years. But even so, I think the silver lining of the pandemic was it caused a lot of people to sit up and say, we got to start to make some of these investments to create tighter links between the demand side, the consumer, and the supply side. And I think what Michael said was spot on. You know, as you start to see omnichannel and direct-to-consumer models emerging, you see, you know, small brands that are delivering their products directly to consumers. That has implications on the supply chain. We're seeing more business model innovation. We're again seeing that need for connectivity. You know, if you know where your Amazon truck is coming down the road with your bag of cat food, yet if you're a retailer, you have no idea where that truck is en route with you know, $100,000 worth of perishable produce. So I think that in the next couple of years, we're really going to see a big shift in investment in that space.
And Seana, just on that point, PitchBook came out with some numbers today, looking at the last mile, mostly the food tech side, the demand side. And they said that we're already this year at 86% of the investment level of the past greatest year. And the majority of that money is going towards food delivery, meal kits, more of those deals. More of them are later stage. And then the other thing is that the interesting thing for me was of the top largest 15 deals, only 5 were in the US. We're seeing a lot of investment occur in places like China and India and so forth. So this is, you know, everybody in the world's eating. So I think that's the important thing. And, you know, get to Michael's earlier point about looking at solving the problems that we have now. We like to say that we actually have enough food right now. We have enough calories. What we don't have is the ability to get the right food to the right people at the right time. We will have challenges in terms of providing nutrition for 9 or 10 billion people. But if we inject this agility through digitalization now, we should have the tools to be able to meet those challenges in the future. Seana and Michael, David's asking a question about aquaponics. Seana, can I turn that one to you? Because
Michael might be better served for that one, but I can touch on it a little bit. So yeah, I mean, I think one of the challenges with the aquaponics and some of the other growing systems there has really been what's the right type of capital for them? You know, is it venture capital? Is it project finance? Is it real estate investment? And I think there's kind of been some, I don't know, challenges around alignment and capital and business models and really how you kind of differentiate those systems. So my comment with the investment hat on would really be one around capital alignment and making sure that people are approaching the right type of funders in order to get those projects off the ground.
And Michael, you know, we've talked about this too as well, particularly on the greenhouse side. is venture the appropriate tool? And just to be clear, we at Better Food Ventures, we don't invest in growing operations. We don't invest in facilities. We try to stay away from bricks and mortar. We even try to stay away from hardware by and large. We're really looking at the software, the digital picks and shovels needed to inject that agility into the food space. But Michael, you want to talk about that from a greenhouse perspective?
Well, I think greenhouse or sunless vertical, when you're looking at large operations, I think what you're going to see is you're going to see a blended capital stack. I think that if as a larger venture investor, other venture investors that want to come in and invest in the parent company as they're developing new technologies and processes and capabilities, that's one thing. But once you start to move on and these facilities are costing $30, $50 million per location, that there are other ways to fund that. And, looking at that is, debt financing, hard assets, it's going to be a much more blended approach than having venture, which may not be the most efficient way to fund, a new $50 million facility, particularly when you see people rolling out, tens of these, 20 of these in a couple of years span. It's pretty big capital expenditure.
The other just practical matter that I would touch on aquaponics is the complexity, right? You've got multiple systems, multiple biological systems that you're trying to manage. And I think scaling that up has been challenging. It's hard enough to do one system with strawberries or almonds or corn. Start to introduce multiple production systems. And there are a lot of complexities to that.
Yeah. Karim, before I hand it back to you, first, let me thank you for the opportunity to just have this chat with Seana and Michael. And then the other thing, just to make sure everyone knows, all of these landscape analyses that we're talking about are available for download on our website at betterfoodventures.com. And thank you.
Thank you, Rob. Thank you, Michael, Seana. So what was really interesting is actually I've looked at your website and looked at the landscapes. It's really, really interesting. Before you go, though, there was, I want to introduce you to a company called World Food Bank, and the CEO and founder is Richard Lackey. And he's doing a lot of stuff in emerging countries. I don't know if you've heard of him or talked to him, but they're doing a lot of, everything that you talked about in the first half of your thing was exactly what they're trying to do in emerging countries to improve food production and feed 1 million people a day. I think that's their goal. And they've integrated agriculture, science, education, and learning through followers, YouTube videos and stuff like that. So it would be a good idea to synergize and have a connection with them at a certain point. And then later on, after this session, we have a couple of executives who are going to be speaking about creating a diversified fund in the CPG environment. And that might be interesting for an introduction, or if you've got time, stay and come back and we'll figure that out at a certain point.
That'd be great. Excellent.
But thank you, Michael, Rob, and Seana. Thank you so much for the information that you shared with us. It's been great.